Hello friends, my name is Behroz and welcome to my channel. Today's video is a recorded podcast with a tax expert in Canada, Amir, who in today's video will explain to us all the compliance related issues pertaining to taxation when you have an e-commerce business. It could be an Amazon business, could be a Shopify business, or any other form of e-commerce business that you have where you are selling products online. He will explain to us what are the tax related compliances, whether it is registering yourself with GST or HST, the way you can create your P&L so you can optimize your taxation. So all of these tips and trips he will explain to us in this video. Also, let me call out, in case you are interested in seeking his services with regards to taxation for your particular business, I will leave his link in the description of this video, which you can use to reach out to him. I always say it is much important to get a tax expert before, or first and foremost, before you even go and get a financial planner. Financial planning is something that you can still do by yourself, but tax planning is something that for which you cannot do by yourself and you need an expert. Now, before going in the podcast, in case you find any value from this video, I have two asks of you, which is one, press the like button, keeps me motivated. And second, if not done already, please subscribe to the channel, because on this channel I post content pertaining to how you can achieve success in your career and build wealth. So if any of these topics are of interest to you, then this channel is right for you. Let's get rolling into the podcast. Amir, thank you for joining again. As I've said in the intro already, what we want to cover today is if I have a business, primarily, let's say an e-commerce business, could be on Amazon, could be on Shopify. How do I go about filing returns for that, deducting expenses, which is kind of the best thing one can find in when they're doing their own business. So I've had an e-commerce business as well in Canada, and I always had this question of what is that I can expense, what is that I cannot expense, what about the GST and the HST and all. So I had a Shopify account. I didn't have an Amazon account, but maybe there are different nuances with regards to Amazon. So if you can speak to both of them for anyone who is having a side business in terms of having an e-commerce business, so how should they go about being compliant? But before going into that, would be great if you can introduce yourself and then we can cover the topic.
Thank you, Barrows. So my name is Amir. I own and operate a company called Finection, which is an accounting, tax, and business consulting firm. We operate in Canada, US, and UAE, and we serve local clients in these countries for their personal and business needs, book for all those bookkeeping, tax, and everything. In addition to that, we also do cross-border taxes by virtue of our expertise in all these countries.
Great, thank you. So let's jump into the topic. So I don't know where to really start from, but maybe if you can give us a big picture overview of what needs to be required for anyone who's running an e-commerce business to be compliant. And then I'm sure I have some questions as well, which I can ask as we go.
Okay, so the first thing is whenever you are starting an e-commerce business, you need to understand that the tax codes or tax rules or laws are not really written keeping in view e-commerce in mind. This is a new trend, right? And these laws are like maybe decades old or sometime in centuries old. So when they were written, e-commerce was not a thing. So you might find a lot of things which may not be applicable to you, but you still have to comply. So that's where there is some gray area, or that's where you need to be a bit more careful. Just because as a business owner, I think it is irrelevant doesn't mean it is really irrelevant in the eyes of CRA or IRS. So that's where we have to be careful about. So that's the first thing. Second thing is, again, you are if you are starting an e-commerce business, yes, you have certain additional things you need to do being an e-commerce, being a virtual business, but at least you need to comply the basic requirements of any other business. So I think as a once you decide on the idea that okay, I want to do this, that, whatever way you figure it out, um, one of the major decision you have to make is whether you want to operate as a sole proprietorship or you want to make a corporation. Keeping Canada in context, these are two most popular options, either as a sole proprietorship or as a corporation. There is a third option, which is partnership, but which is technically multiple sole proprietors combining together. So from tax point of view, a partnership is a combination of sole proprietors, and when they file their return, they would just split the numbers, income and expenses based on their individual percentages. So we will focus on these two parts: sole proprietorship and corporation. One of the biggest difference between these two legal structures is that corporation is a entity on its own, whereas sole proprietorship is what you are. So as a person, you cannot segregate yourself from the sole proprietorship. And this is true from liability perspective and also true from your tax perspective. So from liability perspective, if there is a claim from credit, from, something happens to the product or there's a claim, or for whatsoever reason, if there's a legal claim, you cannot dissociate yourself from uh, the business, because it's a sole proprietorship. You and business are same. But at the same time, it also gives you flexibility because there is not much of paperwork involved. Number one. Number two, it's much easier to administer. Tax filing is much easier. It becomes part of your normal T1 versus corporation. Corporation, lot more paperwork, lot more compliance to do. It has its own tax return. But the good part is it gives you a separate legal existence, which is different from you. For some for some situations, it doesn't really create a separation. For example, if you owe money to CRA and you are kind of behind on that from the corporation point of view, CRA can come after you because you are a director. So you have that personal liability. But in many cases, you can segregate yourself from the corporation, and corporation has its own existence. So that is the very first thing you need to keep in mind when setting up the structure. And I believe the natural follow-up question would be, which one is better?
Yeah, but before going into that,
Yeah.
just one question. Can you give me an example of what is the benefit of separating yourself from the business altogether in an e-commerce setting? Like, what can go wrong where I go like, I wish I had a corporation versus having a sole proprietorship?
Mostly, products where you have some chances of having a claim, maybe toys and all that. Although Amazon itself is very stringent when it comes to what they call ungating the product. So they do a lot of due diligence beforehand already. So that should not really be a problem, but it just gives you an additional level of comfort that, okay, even if something happens after all going through all these checks and everything, at least that is a corporation, not me. Sometimes there might be copyright issues. Sometimes there might be other stuff, right? So copyright is very common in Amazon. So that's where, it can uh, help you when you are a separate legal entity. But again, we have to keep in mind that that separation is only to an extent, um, because I'm not a lawyer, but generally speaking, if something results in a situation where it is proven that it was your willful neglect or your willful activity which caused something done by the corporation, then you are the person doing that. So it's not a license to do anything just because it's a corporation, but it just gives you an additional level of comfort. If you are doing everything right, then at least it gives you some separation which can give you some peace of mind.
Got it. Okay, now let's talk financially. Financially, which one is better?
Okay, so that would really depend on few items. First of all, it would depend on what is your current tax situation. Are you a side hustler or that is your main job, right? That Amazon e-commerce business is that you are doing for your whole day. That's your primary business activity, or that's just a side hustle. Because and if that is a side hustle, then the next question would be, what are you earning from your main day job? Because sole proprietorship is a very good structure to reduce your taxes. So hypothetically, let's suppose if someone is earning $150,000 a year Canadian in Canada, he would be, depending on the tax situation, anywhere between 30. You can say, let's say 30% tax bracket, maybe marginal 35%. So any dollar he earns on top of that is taxed at 35%, right? But at the same time, um, if that business is creating a loss, obviously if a business keep on creating a loss, there has to be a reason to continue the business. But in a normal situation, in the first few years, if business is creating a loss, especially in case of Amazon or any other e-commerce, there's a lot of what they call bleeding in the first few months and even year, when you have to build that, you have to build your ranking, you have to build your reviews, you would gift out a lot of free items and do all of that stuff, and there's a loss, right? And obviously, and for Amazon, when you launch 10 products, not all of them are best sellers. You would have lost in some, you would have gained in some. So, in those kind of situations, and assuming you are earning another 150,000 a year from your day job, and you are expecting a consistent loss for next few years just because you are investing in the business, it can help you reduce your taxes. So it works good. Um, versus someone who earns, I would say 30, 40,000 a month from their day job. Um, they're already in a very low tax bracket, so they hardly get any benefit out of it. And again, another assumption that if that corporation is going to make just enough money that they need for their day-to-day expenses, then they need to take that money out anyways. So one big variable is if you have a high income outside of Amazon, and you expect losses, then it makes sense. But at the same time, if you have a high income outside of Amazon and you do not expect losses, right? You have somehow found a killer product which is going to be the bestseller, um, or you had some experience doing that already from past failed businesses, and now you are certain this product is going to make me money. You got some good deal from the manufacturers and all that. Maybe you are on a wholesale model. So in that case, that's where it makes more sense to create a corporation, um, because you don't want that money to become part of your income if you don't need it. If you need it, then corporation would not really serve purpose from the tax point of view, because if you earn $100 net of all expenses and you need that $100 for your personal activities, for your personal expenses, and you have to draw that money from the corporation either as a salary or as a dividend, then it's the same thing. And there's an additional paperwork with respect to corporation, right? But if you earn $100 net of expenses in Amazon, but you only need maybe 20 or 30, or maybe you don't need anything at all, that's where corporation helps you defer the taxes. That's where you can use that money to reinvest into the business, and you don't really have to pay tax on that. In case of sole proprietorship, same scenario. You are earning 150. Your, from your Amazon business, let's say you make another $50,000, and you don't need that money. You rather want to invest that money into your business. Um, but that investment might not be an expense at that point. So that would really increase your corporate taxes, your personal taxes. So the bottom line is how much. So when if you are on a salary, you might already know your marginal tax rate and your average tax rate, right? Versus you already know the corporate tax is 12.5% roughly, depending on the province. It's 12.5% for first half a million of profit. So now it's very easy math that okay, my marginal is 35, my average is 25, and here I'm paying 12 and a half. If I don't need that money, let's keep it there, pay 12 and a half, and then we can decide what we want to do later.
Got it. Very clear. This is helpful. Now, let's move on to the next question that I had, which was around GST and HST. So, do I need to go and create a separate filing or registry for collecting GST, HST? How does that work? It's very complicated for me.
Okay, so this is where we see most of the confusion in our e-commerce sellers, particularly Amazon sellers, and this is where my first comment would come into play, which I mentioned that tax laws are written well before e-commerce was a thing, right? So, okay, let's go by the general tax law and then we'll come to e-commerce. So the general tax law is um, federally, if your sales is more than $30,000, sales, not profit. So your sales is more than $30,000 in last 4 consecutive quarters or in the most recent quarter, then you need to register for HST within a month.
So,
Yeah.
$30,000 in totality or every month?
No. If in last 4 quarters or in last quarter. So ideally, if it is in the last quarter, it is also part of last 4 quarters. But it's a rolling number. It's not really 2024 or 2025. It's a rolling number. So I need to keep a tab of my sales in last 4 quarters. So if we are sitting in March 2025, so I have to consider from I would say March of 2024 till February of 2025. If in this 4 quarters consecutively, I mean collectively, if I cross 30,000, or only in the last quarter if I cross 30,000, whatever is true, in next 30 days I have to register for HST. That's the federal. Okay, let's call it GST or HST because province wise it would vary, but that is for the federal level, right? So after that, if you are living in one of those provinces which are for HST, I mean, where there is harmonized sales tax, which is you pay one tax and that covers what both federal and provincial part, then you would just register for HST and you are good, right? If you are living in a, okay, when I say living in a province, I'll just explain what I mean by living in the province, but let's just keep it simple. If you are living in a province where where there's a GST and PST where there's no PST, then you are good. Just register GST and you are good. If you are living in a province where there's GST plus PST, and again, if you each PST province has their own threshold. Mostly it is 30,000 for most part. So if you cross that, then you have to register. So the point is you have to register federally for sure if you cross 30,000, and then depending where you are living, you have to look at that province's requirement. If that province doesn't have any provincial sales tax, it's just HST or GST, you are good. If that has PST, look at your province requirement and register for that as well. Let me now explain living in the province. I think living in the province is not the appropriate word. The appropriate word would be if your place of supply, right? That's the word used in the tax law, the place of supply. So when you are selling goods, the place of supply is the address where you deliver the product, right? And that's where it is important to keep a tab on. And now we are going into the realm of e-commerce. If I have a barber shop, my place of supply will always be, or if I'm selling shoes, my place of supply will always be where I have my shop. People will come here. I will give them the shoes. If I have a restaurant, my place of supply will still be somewhere. If I live in Ontario, my restaurant is in Ontario. It will be somewhere in Ontario because obviously nobody's going to order my food from Quebec to Ontario. So we will be very sure that okay, my place of supply is Ontario, and I just need to register for Ontario, and I just need to take care of what are the tax laws for Ontario in terms of sales tax. The problem with e-commerce is that your place of supply could be all over the place. It could be out of Canada, it could be inside Canada, it could be one of the 13 provinces and territories. So that's where your Amazon reporting comes into play, where you have to keep a tab of which province, how much value you are delivering in last quarter or last 4 quarters. Um, so so that's place of supply delivery. So and because for e-commerce the delivery varies, so that's where it is important that we keep a tab of not just how much we are selling, but also where we are delivering, in which province we are delivering in. That is most important part. In terms of the legal word for that is creating a nexus. So your company might be registered in Ontario, but if you deliver goods worth more than $30,000 in some other province, and if that province has PST, if that province only had GST, then you are good because you are already registered. But if a province has PST, then you are supposed to register. Okay. One more clarification on that. Um, this is the general scenario for any e-commerce person, for any business, right? Even if that is not an e-commerce, but you have a delivery outside of the country of the products, then you have to consider. Coming specifically for e-commerce and specifically for Amazon, in last few years they have created what is called marketplace tax collection arrangement, right? They call it MTC. So under the MTC, um, Amazon collects taxes on your behalf and give pay to the government, right? But there is a catch. The catch is that when Amazon collects on your behalf and pays it to the government, it doesn't say that on behalf of seller ABC, here are $20. On behalf of seller DEF, there are $100. They would just do a pool and do it. So first of all, we have to understand why that came into place. Um, Before that MTC arrangement, if I buy a product on Amazon as an end user and you are a seller and you are registered for HST and that product is $100, so Amazon would charge me $113. But if I buy the same product or similar product from another seller who is not registered for HST because his sales is under 30,000, he can sell the same product to me for $100, right? And that's where government came into looked into this and said that no, this is unfair and all that stuff. And they said that okay, Amazon has to collect no matter what. We don't, I mean, yes, end user and supplier is that ABC or DEF, but Amazon is the marketplace where it is being sold, and that is definitely selling more than 30,000. So these digital marketplaces have to collect HST and have to pay HST on each and everything which is being sold on Amazon. HST, GST, whatever it is, right? So they have to collect and they have to pay. So if that particular province has that MTC arrangement, with Amazon, and I believe now most of the provinces have. There was probably one or two left, but now I believe everybody have it. So you are good. You don't have to worry about it, right? But if you are registered for HST, then you need to you need to go into your seller's settings and tax settings and enter your relevant details. If you're registered with just federal government, you will enter your HST number. If you're registered with Quebec as well, you will mention your relevant tax ID, and then Amazon will still collect, but they will give that money to you, and you are supposed to pay, right? So for the federal part, if you cross 30,000, you are Amazon seller. Despite MTC arrangement, you have to register, you have to enter your details. Amazon will pay you, and you will pay to CRA. For the provinces part, where there is MTC arrangement, they collect and they pay. That's fine. That's where we have some gray area. If you want to be really sure, just do it on your own, but it's just an administrative burden. So most of the seller decide. I mean, if let's suppose you are a seller in Ontario, and for some reason you are doing a good sales, and you end up selling more in some other province where there's PST, MTC will take care of it, and people choose not to additionally register for that jurisdiction because MTC is taking care for it. So generally, if you are selling e-commerce, I mean, there are customers who sell e-commerce directly from their website. So obviously they don't have that kind of arrangement. And if they don't have that kind of arrangement, then they have to take care of each and every province. And if they cross that number, they have to register.
Got it, Amir. This is helpful and very clear as well. Don't have any more questions on the GST HST part. Now, the other piece I wanted to talk about is the P&L itself. So there are one which are direct costs. Let's say if you invest anything in the marketing, if you pay your suppliers, the product costs, these are very direct costs related to the business. It makes very sense that if you have an revenue coming in, you should book those as an expense. But then there are certain indirect costs as well. I would want you to shed some light on those. What are the things that I can charge to my P&L which are not really directly related to the product but can still be attributed to the business?
Okay. I think one major such expense item which most of the Amazon sellers would use is home office expense. And more often than not, is not just the use of office. It's also sometimes they are using their garage as a storage area or their basement as a storage area. So a good practice would be to have an estimate of the portion of your in terms of square feet, the portion of your house that you are exclusively using for your business, and that could be your office space. That might be one room, a corner in the living room, whatever that is. That might be, as I said, your garage, your basement, where you have stuff lying there. But the criteria is it has to be a dedicated space, right? So first of all, you need to know that estimate. For future audit purpose, it might be a good idea to randomly take some pictures at different point in time, uh, to have a proof that you were using it. And if you are taking the pictures, make sure that you don't have your kids' toys lying around in that area. Otherwise, that is not exclusive. So yeah, it has to be exclusive. You can claim that percentage of whatever percent that comes out to be, and it's okay for Amazon sellers to have slightly higher percentage compared to an accountant who is using an office, because I don't need a storage, I don't need other stuff. But again, that depends. If you are purely on the model where everything directly ships from China to your Amazon warehouse and you are claiming a storage, then that might be a problem. So yeah, so you can claim it, and what you can claim, pretty much everything which is spread all over your housing. For example, your interest for mortgage or your rent, your property tax, your utilities, internet, you can claim all of these. But if you are doing landscaping in your garden, you cannot do this, right? Because that doesn't really affect, or that is not really needed for your Amazon business.
Got it. One question on housing expense or space expense, office expense is can you depreciate your house as well or no? Because if I'm renting, I'm paying the rent, right? That is very easy. If you said if you're not renting, then you only can charge portion of your interest payments, not the principal. Is there a way for me to charge the portion of the principal or no?
If you do so, you will lose your principal residence exemption. So I suggest not to do so. And another reason is, whenever you depreciate, besides the principal residence as exemption, Another factor to consider is that whenever you depreciate for any asset, and later on when you sell that asset, so if you bought something for $10, you depreciate for $4. Now that is worth $6 in your books, and now you sell it for $12. So now your gain is $6. 12 minus 6 instead of only $2. So that's where your income would hike a lot. So from that point of view, and also not to lose your principal residence exemption. And that's another reason we do not want to go too high to the percentages of use for the house. Because if you are, I mean, even if you are actually using 50% of your house for business, then you cannot claim, I mean, that might be a real scenario, but then it means that it's not really a principal residence for you.
Got it. Very clear. And okay, let's move on. So, what other key expenses that I can include here?
Your vehicle maybe depending on again what's your model, what you do. For that Amazon thing. Some of your travel if you do it for a business purpose. But travel is one of the categories CRA is very particular about, right? So you have to be a auditor yourself to record that travel expense. You have to audit yourself that okay, let's suppose if there was a conference for Amazon sellers in Vegas, you went there, right? Um, Conference was for 2 days. You stayed there 5 days. You went with your family. So it's okay. It's a genuine business expense, but don't just put everything on that, right? Your wife and kids, if you went with them, that was not a requirement of the conference. So just put your ticket. If you had a hotel for 5 days and the conference was for 2 days, so okay, 3 days you can claim under business expense. Remaining 2 days should go under the personal expense. So travel, as long as that there's a genuine business requirement, that's fine. But just you know, uh, be fair about it. That's what I would say. Vehicle, maybe an expense because you might be again depending on the model. If you are in a drop shipping model, you would have a lot of use of your vehicle. If you physically, um, they have a word for it. They call it arbitrage. I think there's one is online arbitrage and one is some other arbitrage. So if you are in one of those model where you buy stuff from Costco, you go there buy stuff from Costco and put it there. Once you get the order, you go buy and you deliver it. So yeah, that's where you would have a lot of use of your vehicle as well. If you procure from your supplier locally for some other reason, there might be a use of vehicle as well. And if I go out of the Amazon realm and you are just a starter and you are doing some of the deliveries yourself, obviously you can claim that. But generally speaking, for vehicle, there has to be some reason to you claim that because this different businesses have different things you can claim much easier than others. For example, if you're a realtor, you can claim your vehicle quite easily, right? Because you are kind of driving all the time. But in this business, vehicle is not really needed unless your model dictates so. So there has to be a reason to use the vehicle.
Got it. And what about utility and mobile, internet, those charges?
Yep, you can prorate it. If that's the internet at your home, you can prorate it. Utilities, obviously, you can prorate it. As I said, whatever expenses spread all over the home. I mean, for example, electricity, you cannot just have a separate meter for the room which is office, right? And you cannot just afford to have operate without electricity. So yes, that's a necessity. You can prorate it, right? But what some people just go overboard. They would do their washroom renovation altogether, a new washroom, and trying to claim that that's a bit overboard, right? We have to understand that when CRA is looking at these expenses, sometimes you might be lucky, good for you. But if they start digging in, nobody keeps the perfect record. Most of the people, I would say at least for 9 out of 10 people, they are not able to keep the perfect record. They might have the genuine expense, but they might not be keeping the perfect record. So just do not invite CRA by adding something which is, too overboard.
Yeah, I agree. As in, the objective should be to avoid an audit altogether,
Yeah,
even if that means you are missing on something which you could have stretched, but you rather avoid the audit because if the audit happens, then it would be more work for you versus the amount that you are trying to save.
true.
Got it. And one last question, which is around meals. Is that something that is possible to expense as well if I'm having a meal with the bunch of with my family, friends, and maybe I bring up the this topic of business as well with them? but it's part of that meal. Is that something I can expense?
You can discuss your family without the meal. They wouldn't mind. See, again, uh, when we submit everything to CRA, the rule says that it has to be a relevant business expense. And, just because you brought it into the discussion doesn't really make a business expense. Um, it has to be, I mean, for meals, the policy is very clear. It has to be your customers or your suppliers, right? A staff meal has a different policy, but your family is not your staff unless they are on the payroll. But apart from that, it has to be customers and suppliers. And for Amazon, mostly it won't be a customer. Maybe it might be a supplier. That's perfectly okay. Your supplier is in Turkey. You go once a year to meet them, to build relationship with them because you are their exclusive distributor in North America. Perfectly okay. You bring some gift for them. Perfectly okay. But situation dictates that if you are just selling random computer accessories or stuff like that, and you say that I had a meal with my supplier, who is your supplier, some random person sitting in China whom you just bought $1,000 a year, then doesn't really make sense.
Got it. Thank you, Amir. Thank you. This was helpful. Again, I appreciate you coming in, sharing this wonderful knowledge. As I said before, if there is anyone who is interested in getting your services, I will leave your link in the description of this video. I highly recommend to get help from a tax consultant, tax expert for any of these matters. Rather, when I'm advising anyone, I say a tax person is far more important than a financial planner. Financial planning is still something that you don't really need to have a PhD or an exclusive education in it. But tax is one thing which, if you don't know it, you don't know it. Financial planning, you can still manage, you can be very passive and all. The tax piece is something where you really need an expert. So, whenever people come to me for advice, I say, pay for your expert first before you look for a financial planner. But thank you for joining.
Most welcome.